Have you ever been in a situation where you're super excited about a new credit card offer, maybe a store card from your favorite retailer, and you think to yourself, this is perfect. But wait, what's the catch? Is this going to ding my credit score? It's a common question, and today, we're diving deep into the practices of a company that's behind a lot of those offers, Bread Financial. Specifically, we're going to answer the burning question, does Bread Financial pull your credit? Now, before we get to the nitty-gritty, it's important to understand who Bread Financial is. You might not recognize the name, but you've likely interacted with them. They're a financial services company that partners with hundreds of retailers, both big and small, to offer private label credit cards, co-branded credit cards, and installment loans. Think about store cards from companies like American Eagle, Old Navy, or even some major jewelry stores. There's a good chance Bread Financial is the bank behind those cards. Their previous name, by the way, was Alliance Data, so if you've heard that name before, it's the same company. So, when you apply for one of these cards, what happens to your credit report? The short and direct answer is, yes, Bread Financial pulls your credit. In fact, they almost always perform a hard inquiry. Let's break down what that means. When you submit an application for a new line of credit, whether it's a credit card, a mortgage, or a car loan, the lender needs to assess your creditworthiness. They do this by requesting your credit report from one of the three major credit bureaus, Equifax, Experian, or TransUnion. There are two main types of inquiries they can make, a soft inquiry and a hard inquiry. A soft inquiry, or a soft pull, happens when a lender pre-approves you for an offer. This is often what happens when you get those pre-selected mailers. It's also what happens when you check your own credit score through a service like Credit Karma. Soft inquiries do not affect your credit score and are not visible to other lenders. A hard inquiry, on the other hand, is the one you need to be mindful of. This happens when you officially apply for a new line of credit. When a lender performs a hard pull, it's noted on your credit report and can cause a small, temporary dip in your credit score, usually by a few points. The impact is generally minor and fades over time, but multiple hard inquiries in a short period can be a red flag to other lenders, suggesting that you might be a higher credit risk. Because Bread Financial is the lender behind these cards, they are the ones conducting the credit check. They need to see your credit history, payment behavior, and current debt to make a decision on your application. This is a standard and necessary part of the lending process. So, when you see that application for a 15% off coupon at your favorite store if you sign up for their card, just know that when you hit submit, you're consenting to a hard pull on your credit report. Now, here's a key detail to remember. While they do perform a hard pull, Bread Financial is known for being a little more lenient with their credit requirements compared to some of the major banks. They tend to approve applicants with fair to good credit, whereas some of the bigger players might require excellent credit. This is why you often see their cards marketed to a wider audience. But even with more flexible criteria, the hard inquiry is a non-negotiable part of the process. So, the next time you're considering a store credit card, be aware of what's happening behind the scenes. It's a great way to save money and build loyalty with a brand, but it will come with a hard inquiry on your credit report. It's a small price to pay if you plan to use the card responsibly and benefit from the rewards, but it's an important factor to consider in your overall financial strategy. With that said, thanks for watching, and until next time.